Hello traders, Gary Wagner here. Approximately 1:45 in Honolulu, 6:45 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is November 19th, 2021, and this is the daily report for gold and silver, our weekend review. A voting member of the Federal Reserve, Christopher Wallace, came out with one of the more hawkish statements I have heard in a while, because he is addressing the possibility of expediting the tapering timeline to push it up to April in order to raise rates sooner. We'll have to see if that has any traction with other Fed members, and that will certainly be on the minds of market participants next week. The entire precious metals complex did trade lower today, gold giving up $14.60 and is currently fixed at $18.4680. There was dollar strength that accounted for a major component, but the dollar strength came from statements made during a speech today by a voting member of the Federal Reserve, Christopher Waller. In his speech, he said that the inflationary pressures need to be addressed sooner rather than later, with a much more hawkish stance. The dollar closed up by 0.56% or 53 points. It is currently at 96.08, the highest value of the dollar index in 2021. Silver gave up just over a full percent, a drawdown of 27 cents, and is currently fixed at $24.63. The primary force that moved the dollar to a record high this year, as well as taking gold lower, was statements made by Fed member Christopher Waller. He had a much more hawkish tone than other Fed members have had in the recent months. But the most hawkish statements that he made during the speech was that we should accelerate the timeline of tapering so that it is complete by August rather than June, which would allow the Federal Reserve to begin to raise interest rates quicker than anticipated, because the Federal Reserve will not raise rates prior to the conclusion of the tapering process. On a technical basis, when we look at this chart, it didn't cause major damage, but we did have it break below what I believe to be the current support level at $1,851. We have not seen the market trade to this low throughout the last week, and we will now have to wait till Sunday in the United States and Hawaii to gauge if there is a lasting effect to his statement when markets resume in Australia, Hong Kong, and London. Unquestionably, there is a divide within voting members of the Federal Reserve, some being more hawkish, some being more dovish. The statements made today definitely puts Waller into the hawkish camp. He is the newest Fed member coming into office in 2020. We'll have to see if there's spillover with other statements made by other Fed members either this weekend or early next week. On Wednesday, the PCE numbers, or inflationary core index, will be released. That will be critically important. And then, of course, the last FOMC meeting for the year, mid-December, that will be important because we will get a sense to see if the consensus of the Federal Reserve has changed or it's one member speaking his mind. If today's speech by Christopher Wallace is a sentiment carried and spoken about amongst other hawkish Federal Reserve members, we could see further downside in gold. If that is the case, we would look for support to come in at $1,833.30. But again, Waller is one Fed member, and his statements were certainly hawkish, but it is not a representation of the entire body of the voting members of the Federal Reserve. This current chart we are looking at is an area chart, but it is based upon the highs of the day rather than the close. We can easily see that this area at 1,880 continues to be our first primary level of resistance, and above that really is $1,920 per ounce. To summarize what has happened this week, specifically in gold, we did get numbers last week indicating that inflationary pressures are at a 31-year high, 6.2%. We continued to have resistance in an area between 1880 and 1867. That is this area here. Up until today, we had strong support at 1851. However, that was taken out today with these lows. If we see a further decline, I would look for support at 1833. If it's a one and done event, in other words, some dovish statements come out over the weekend by other Fed members, I would expect gold prices to move back into this particular sideways trading action, which I have labeled as a consolidating market waiting to move to higher highs. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.